All right, ladies and gentlemen, I got your watch list coming in December 12th, 2019, and the stock market is about to get really volatile. So this could last for a few days, maybe like we've saw coming in before this Fed, if you guys remember, with this stuff with the trade war. But we got the Fed today. And what was said and kind of the guidance from the Fed, we've been talking about this, that was really important. It's leading to something. We have the trade news coming out on Friday, but we're probably going to hear something from this. And for all you YOLO degenerates out there, this is setting up an interesting opportunity with tomorrow being only Thursday. So I want to talk about all of this. There's a long explanation, and I'm going to kind of cut through it. If you missed it on stream, I would strongly suggest that you guys go watch. But I will try to give you guys a Spark Notes version of it. But it's pretty interesting what we have going on here. And again, the opportunities that it's going to open from timing and even some of the plays we did today. You know, we sold some premium. We did some cash secure puts. We have a lot to go over. So I'm going to go over the plays. I got some keys for you tomorrow, and I'm going to talk about what I'm going to be looking at tomorrow as well too. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it's pinned in the comments. And if you go there, you can watch today's recap with the Fed. So again, you can see it in real time as well as some of the other stuff. But let's get into it. The first thing to talk about, and I have notes, again, I have your keys and all that, but we have notes coming in from today, and these are what we took during the speech. And there was a few things, and I took even I added, you know, there's what Powell said, and I added my own notes. But essentially the key of today was that FOMC interest rate decision came out. They didn't cut rates. It was pretty much expected. Now, like I discussed in the last few days, I said we were looking for stuff like interest on excess reserves, bond buying program, all of that. But we didn't really see much change. So there was something changed in terms of the wording. They removed economic stability or something along the lines pretty much of the trade war. They said the economic certainty or global certainty with trade, they removed that. So they're kind of more certain with what's going on there. And they pretty much said, which some people could say was unexpected or it kind of was expected, they said they're not going to raise rates at all for 2020. And they said they're ending it here, that this is pretty much the last of the cutting. They're going to keep it here. Even during the press conference, Powell was saying that this is an appropriate rate for what they're looking to do. So in one end, that signals that this mid-cycle adjustment is over. And then on the other, now this is going to be the baseline, but they've said before that they're not going to move and that they're going to do this. So that could change quickly. So again, that's what we're going to be looking out for coming into 2020 in all these few months, but wasn't really clear guidance. They just kind of didn't make things worse. And that's what we talked about there. So that's what happened today. That was the event. Now where everything kind of gets deep into looking at the keys and everything and how this leads to the volatility that is going to come up here in the next few days. One, and this pretty much sums up all of everything I'm saying here, is that you're having the key trade news come on Friday or a Saturday, I believe, but then you're probably going to hear some updates before. The market may follow up to this because, again, you can see this wasn't too big of a move for a Fed, but then again, how we even saw like some of the plays like Bank of America played out. This played out almost exactly how it did in September, just a little bit more muted. So this wasn't that big of a move for a Fed. So we might see a continuation. We might not until the market gets the key trade news. But then after that, you only have 2 weeks, and I said things are going to go fast, and maybe even two. Before I even tell you any more of this volatility in this, I'm still banking on my end of the year prediction. I still think it's bullish for the most part. That's my opinion on it. That's what I view. You know, option trading, so you can't lose out on financial investment. This is just what I'm thinking with it. I know things could move fast because I think they're going to get over it. However, now they're just the timing and what was revealed by Powell going to bring up volatility at a later time. But specifically, what's going on here at the end of the year now is that, you know, based on how Powell responded to the stuff with the repos and the bonds, you know, again, the questions he was asked and the situation, and pretty much the thing that gave it away for me is that he said it started 1 month ago, and then the wording, he said they found a solution. And I said this reminded me of post-World War II and even Bretton Woods stuff in the past with economic developments, in the sense that once they find out there's a problem, they implement a change, but it takes a lot of time for them to realize, well, that little change or that Band-Aid is what I called it, could only do so much. So this leads to a bigger theory, but this was a turning point. I mean, I think Powell, I think that's going to be an issue. And if there is an issue in the bond and repo market, like I've been saying, that could be a problem. So now how does that relate to this next 2 weeks? The end of the year, there's usually a liquidity crunch. So now with I brought up JP Morgan again. I'll make another video on this to even accurately explain it all. But, for the watch list sake here, you got all these banks doing stuff. But even towards the end of the years, with how people are setting up and balancing their books, there's usually a liquidity crunch. So this is going to be essentially the first test since September, where now, depending on what happens with the trade news, and if that makes that would, then this is where someone said, is the trade war a big deal? Yes and no, but as you see here, this could exacerbate any bad issue that ever occurs. So if the liquidity crunch is there, you're probably going to see the Fed do the repos and do more of that stuff, because that is the system they created to stop it from getting out of hand or hurting things really, really negatively. That's literally why they're stepping in. So it's essentially going to be this end of the year liquidity crunch plus trade news versus the Fed. So if the Fed is able to sustain this and keep it up and their system works past this end of the year liquidity, and then even with the trade news, or if the trade news is good, that's what's leading me to say we're going to be bullish. However, I'd say it's probably, in my mind, I give it like a 30% chance the Fed doesn't do it properly, or there's more of a liquidity problem that arises, then that would again increase volatility. But there probably will be even a lot of back and forth. So really what I'm saying here in these next 2 weeks as well, it's the end of the year coming in. Now we're getting this. The minute the trade news comes off, things are going to start moving pretty fast. So keep your eye out for that. But like I said, with all of this, with the banks and I could give a really deep underlying explanation of all this, but essentially this is boiling down. If the Fed is not able to handle the end of the year, and then April, again, that's the time now when some more tax stuff and all that comes, and when they have their programs and this plan ending, and then now how all this relates to bonds, it will pretty be bad if they can't do that. If they can, it will be bullishness and add some level of stability at the very least. But again, we will see. So those are your keys coming into tomorrow. We'll give an update, but I'm going to be watching the Fed in bonds and all of this too. And I even gave an update on a play. I kind of want to do a TLT long-term play. I might even have to just explain that in another video with you guys. So let us get into the plays. So right off the bat, I'm sure a lot of people have a question with Bank of America. What happened? The puts went down about $30 of the 50, so those are down. I'm still going to hold them. Bank of America didn't really move. That's why I got a little bit of extra time, but I like how it's setting up. Again, even now with this liquidity crunch and expecting this volatility, I'm going to hold both those plays. The calls now are pretty much at zero. They're pretty much at break even, so it's weird, but I'm watching those. My thesis, and hopefully you guys see, my thesis stays the same. The only difference is there was more implied volatility before we knew what was going to happen with the Fed. Now the Fed takes away that little 10-20% turbo booster, the thesis still stays the same. So that's why I'm going to be holding this throughout. But that's what we got there. But now the Lululemon play hit. So this was the one I've been talking about for the last few days. If you've been watching, remember I did that trade this morning. I was going to do it at the end of the market, but I tried in the morning to see if I got filled, and I got filled at $398 or like $393. Pretty much it was about $100 to risk, or $100 collateral to make $400. So I did the one where it's spread out. And again, we told you all this on the watch list if you guys have been watching. But if you remember, we sold the 225 put for next week and bought the 220 put, and then we sold the 235 call and then bought the 240. But essentially now you see the stock's at 222, even though we sold the 225, but that's going to be worth less value tomorrow because of the expiration in the IV. But now, pretty much if this thing bounces and closes up anywhere higher from here, our break even is 220 is where we lose on the low, or 240 on the high. So being at 222, it's looking pretty good for the end of the week. So any continuation there is going to be good, but that play hit. So I'm going to be watching that. Depending on where it's at, I might, if we're up over like 60% on that tomorrow, I might take it tomorrow. If not, I might hold it, and we'll see again. So hopefully you guys are on stream. But if anything, though, I will be watching this even for a separate play as well for the continuation into tomorrow. But this is a pretty small drop, a little bit less than what was expected. I believe they were pricing in $11 or $10. They moved $7. So we'll see how that plays out tomorrow. But those were the two plays. And then another play day, we did Snapchat. So I'm going to make another video on this for you too. But we sold premium on Snapchat to build a long term. And then I bought these 3 shares with it. It was a put buying long-term position strategy, so we'll go over there. But there was that, and then that was the only play that we made. So we were holding the Bank of Americas and the Lulus, but that was pretty much it. I am watching the TLTs, and again now I was talking about a play where, and again I'll give you guys another video on this, but simply, we came to the conclusion, this was the conclusion of my whole bond thesis, just in the long term, and how we don't know that, again, even though there's volatility here, opportunity in the short term, there could be massive volatility that we could see in the next few years, even all this recession talk. And what I think bonds is presenting a very, very historical opportunity to a degree. So I'm going to start building a position around TLT with shares and selling premium on it. And then, the best part is, it can offer upside. It's just like buying bonds. I'm going to put a larger amount into it, but then it also pays a two and a quarter dividend. So we'll take that. But if anything, though, watch TLT. You could even see kind of on some of the shorter term moves. It moved a little bit more than Bank of America, but kind of roughly did the same thing. So watch out for them. Then I'm going to be watching out for FedEx as well. Remember, they got earnings here, I believe tomorrow. I think it's going to be in the morning. So I think we're actually a little bit late there. They usually report in the morning. If it's after hours, we'll see. But if anything, watch a continuation. If there is a chance for an iron condor, I'll be letting you know, and I'll call that out on stream. And then Facebook, they did a lot better than the market. And remember, yesterday they traded a little bit weird. They kind of outperformed, but watch where they're at. They're intriguing me here from a trading perspective if we're going to see them kind of have a bigger breakout. And then again, kind of with all this end of the year stuff. So watch out for them. Apple as well, too. They were really, really strong today. They're up 1% as well, too, but they were up there yesterday. So I want to watch them, especially even at this 272 level. Then NVIDIA, this is another potential play we could give you. It's the same one as last week. It's the weekly 220. So tomorrow is going to be interesting being a Thursday. But remember that went from 40 cents to $1, then back to 40. It was at $40 today. Or 50, went up, came down, did the same thing. But these are going to start decaying harder. So again, depending on how things move, any news, there's going to be some, as I said, for some of you YOLO guys out there, you're going to be able to, you can play a lot of this. Imagine today was Friday. It feels like a Friday, but it's not. So if you do want to set up some of those weekly Friday plays, keep your eye open for tomorrow. But watch out for them. Watch out. Boeing, they were kind of crazy. See, and that's one of those. I know they had crazy options as well, but watch out for them. They're at an interesting spot, bouncing literally between 340 flat, and then now they're right under 350. So keep your eye out for them. Then Target, I'm still contemplating shares, but even a flip, hopefully now being Thursday, I'm going to look at the premiums. They were expensive at the beginning of the week, so we'll see where they're at now, not that they haven't done much. And again, too, we could take advantage of credit spreads as well if you want to take some of those risks. But then there's also Costco. They have their earnings, I believe, this week. I think they might also be a good iron condor. So I'll give you guys an update on that tomorrow if there is an opportunity there or on stream. So again, make sure you guys are on stream or you get your stream alerts, baby. We'll see you there. But watch Costco. I like it. And then JP Morgan in the midst of the whole thesis stuff. And again, they're a lower volatility bank play. So watch them. And then lastly, there is a few buyouts and bigger plays that I'm going to just be keeping my eye on. And you should too, or even in the sense of more news coming out. But watch Log Me In. They got a buyout offer today. Then Shop. This one, again, this wasn't buyout, but again, more volatility. They're moving a little bit weird, kind of frustrating some people. But again, start thinking and pricing into next week. But you're seeing that melt up. And then finally, UNH, like we said, but that is your watch list, ladies and gentlemen. So a lot happened. I had to break it down. I tried to keep it as simple as possible because I probably could have made this a 1-hour watch list if I wanted to. So come on stream and ask questions and make sure you guys are subscribed for the, and follow along with this week. But there's a lot of information. It's just going to be how are we going to digest it and go over it. So let's go, baby. Hopefully I see you in the tomorrow. Make sure you're hydrated, healthy, ready to go. Make sure you drop your thumbs up on the video. Make sure you post your watch list. Get your helmet on if you remember. Let's go, baby. I want to see y'all create, baby. It's the creators in the house. Let me see some. Get creative with the plays. Get creative with the trades, the spreads, the W. Let's go!